Today, I want to talk about a topic that is ignored, and it plays a big role in how much you make and how much you keep. Welcome back to the channel. I hope that you've been doing great. So, when it comes to the separator, especially if you live in the United States or Canada, how much you make, is very important, of course, but how much you keep is even way more important. All right. So, we're going to look at two categories of people here. And if you live in one of these countries, you fall in either one of them. You're either an employee or you're a business owner or self-employed at 1099. All right. So we'll look at how these two people get taxed. The reason why, you watch some videos or you hear the rumors, successful people don't pay taxes, rich people don't pay taxes. You need to understand the mechanics behind that. All right. Now this is how it basically works. When you're an employee, you make an income. All right, because the IRS knows how much you make. All right, when your money comes in, first of all, you pay what the IRS is due. You pay the IRS to contribute to your Social Security. All right, these two are a must. They have to happen. So you pay the IRS first, and then secondly, you pay yourself. All right. So whatever goes to the IRS, depending on what the tax bracket is, could be 20%, could be 30%, could be whatever percent it is, that goes to the IRS. All right. The rest is what comes to your bank account. Now, when it hits your bank account, or before it hits your bank account, depending on what the company you're working with, you may contribute to your 401k or to your retirement fund. All right. So that portion goes to your retirement plan, whatever amount that is. Then the rest is what you see in your deposit, as in your bank account. Now, from that, you need to, of course, spend on your necessities, right? Your necessities are whatever it is. I just named just a few. It may or may not fall within this category, all right? That includes, things like grocery, utilities, rent or mortgage, insurance for anything, car insurance, health insurance, whatever it is, all right? Shopping, buying online or buying wherever, it doesn't matter. Your savings, if you want to save some money at the bank. And of course, if you are, an immigrant and you probably send some money back or out of the country, you will do that as well. But the crazy part is most people only focus on this tax they pay, all right? The average person thinks they only pay taxes once, which is how much goes to the IRS, all right? But when you look critically at how much tax the average person ends up paying, is way more than that, all right? Because guess what? Each time you go to the grocery, you go to Walmart or Target or Cup Foods or Burlington or whatever shop you buy at, it doesn't matter. When you go do your grocery shopping, when you look at the receipt, at the bottom of it, you still see something that says tax, sales tax. So you're still taxed on money that you've been taxed already, all right? When you pay your utilities, you still see something there, tax. When you pay rent sometimes, right, the bill still comes with a small portion that says taxes. Insurance, the same thing. When you're shopping online or wherever you're doing your shopping, you still pay taxes. When you save your money at the bank or a credit union, at the end of the year or end of the month when they're about to credit or when they credit your savings, guess what that institution does? At the end of the year, they send you a 1099. They send you this form right here. They send you a 1099, which is basically saying, you saved the whole year, you saved 20K, and based on 4% if you have a high yield savings account, or based on the mediocre 0.02% or 0.9% with Wells Fargo, typically, all right, maybe you made an extra $5 as interest for that year, all right, or maybe you made $10 or $15, doesn't matter how much you made. But they send you a 1099 and you have to file taxes telling the IRS, you know what, I made $5,000 on this money. I have to pay taxes on this money that I made. All right. So you discover that the average person, the W-2, ends up paying way more than just one tax. They pay all these taxes. So at the end of the day, instead of 20% or 15% or whatever the percent is that is going towards taxes at the beginning of the year, the average person, before they open their eyes, have spent about 50%, or maybe a little less than that, 45, 50, in some cases way more, 51% of their hard-earned money on taxes alone. All right, we're not talking about any other thing. It's just the big one that we'll focus on. Now, come back to this other people. When you're a business owner, The rules are reversed. Because here you pay the IRS first and then pay yourself second. When you're a business owner or a 1099, you pay yourself first. So the money comes from your business or wherever the income is coming from, but it's gonna go to you first. It's gonna hit your bank account first, of course, all right? When it hits the bank account, the IRS is gonna wait. They're gonna have to wait till the end of the year, all right? While the IRS is waiting, this person here, the business owner, guess what? They could go ahead and do their groceries. They're still gonna pay taxes, of course, like everyone else. They're still gonna pay these small taxes. But what happens is, at the end of the year, depending on how much they spent on running their business, all right, I assume all of these are business expenses. I'm not just saying you just go on a shopping spree because you're a business owner. No, they have to be qualified expenses that you can write off as a business owner. I'm not a CPA. I'm not a tax advisor, so I can't speak details on this, all right? I'm just sharing basic information here. Now, after they are done, at the end of the year, this business owner gets to tell the IRS how much they want to pay in taxes or how much is left for them to pay in taxes, all right? Guess what? If you made $100K in your business, and after spending on your business on advertising, on you could even write off your car. If you need your car for your business, you could write it off. There are rules around this. Transportation, you need to drive to go meet your clients or to work, stuff like that, you could write it off. You rent an office space, you're renting it, you could write it off, all right? You bought equipment for your business, you bought a laptop, you bought a phone, you bought a flat screen TV, you bought a board like the one I'm using right now. Those are business expenses that this person can write off. If they bought a computer, stuff like that, you could write off all of this. So if at the end of the year, this person has successfully spent the entire $100,000 on their business, legally though, they could tell the IRS, you know what, Mr. IRS, I know I made $100,000, but based on my business and how it ran this year, I spent everything. I even spent more, which means I went on a deficit, which means I spent $120K on my business this year, which means I owe you nothing. And the IRS is okay with that. The IRS 100% understands these rules, all right? Or you say, you know what, I spent $90,000 on my business, so I only have to pay you taxes on $10,000. So tell me how much I have to pay you on $10,000, which means my profit was only 10 grand. So how much do I need to pay you off of this $10,000, all right? Now, there are tax codes for the informed and tax codes for the uninformed. There is a saying, when you're not informed, you are deformed, all right? The reason that statement goes out is because rich people or successful people or business owners and entrepreneurs, it's not that they avoid paying taxes. It's just that when you understand the tax rules, when you understand the taxing game, the tax codes, you can leverage every single one of them to your own advantage. When you don't understand it and you limit yourself to just this, there is nothing you can do here. You cannot write off your groceries and expenses when you're a W-2. You can only do that if you're on a 1099 or a business owner, all right? And the reason why business owners don't pay a lot in taxes, some of them don't pay taxes at all, is because they provide jobs, all right? They provide employment because they're probably employing a couple of people. They provide housing. If you're like in the housing industry, like you're the a landlord. Each service they provide to the community is one service that the IRS, that the government is spending less. For example, if this person employs 5 people, that is 5 less people that the IRS or the government would have to worry about creating jobs for. So these tax codes are incentives. The tax codes are incentives for anyone who understands and wants to leverage them, all right? But if you don't position yourself to leverage all these tax codes, you cannot. You cannot legally leverage them. Now, I understand it's tax season very soon. Most of us want returns from the IRS. But guess what? If you just have a W-2, there is nothing much you can do, all right? I know there are some tax preparers out there who would cook the books just for you to get a return. But I'm telling you, if you want to stay legal and you want to stay on the good side of the IRS, You know, you want to do things right. You want to set things up the right way so you can legally write off your expenses and not have to fall in trouble with the IRS for not complying. All right. Another thing is, when you understand the tax codes, you can maximize your tax advantages. I remember there was the presidential debate where Hillary Clinton was, claimed that ex-President Trump didn't pay a lot in taxes. He was a billionaire but doesn't pay taxes. And he said, because I'm smart. I'm smart and that's why I don't pay taxes. And he's 100% legal, all right? If you understand how to leverage the tax codes that are available in the system, you can literally live tax-free, 100% tax-free. But you need to understand the rules. And to understand the rules, you need to seek information. You need to seek information from experienced and licensed professionals who know how the rules work. All right? I know there's a lot on this board, but I hope that my explanation was way better, because just looking at all of this, it's confusing. All right? Like I said, I'm not a licensed CPA. I'm not a licensed tax preparer. I'm not a licensed tax strategist or whatever. I am a licensed financial professional, and this is a little bit out of my scope. But I just wanted to put this down to illustrate how you can, get a little bit more of your hard-earned money. All right, because I see a lot of people in the middle class paying way more than they're legally allowed to pay to the IRS. And it's about time we started leveraging the systems to our advantage. All right, as always, thank you so much for watching. Stay blessed, stay insightful, dare to dream, and of course, subscribe and like this channel so we can keep creating content and feeding you, valuable information. Thank you, and until next time, take care.